Ladies and gentlemen, good day and welcome to JTL Industries Limited Q4 FY26 earnings conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pallav Agarwal from Antique Stock Broking. Thank you, and over to you, sir.
Yeah, thank you, Yusuf. Good afternoon, everyone, and a warm welcome to JTL Industries fourth quarter and FY26 earnings call. We have the senior management today with us, represented by Mr. Pranav Singla, the Executive Director, Mr. Dhruv Singla, the Executive Director, and Mr. Naveen Laroya, the CFO. So I will now hand over the call to Mr. Naveen Laroya for his opening remarks. Over to you, sir.
Good afternoon, everyone, and thank you for joining the earnings conference call of JTL Industries Limited to discuss the performance for Q4 and financial year 26. We appreciate your continued support and interest in our company. During financial year 26, the company continued to see healthy demand across infrastructure, construction and industrial applications, better utilization across facilities, improving contribution from value-added products and steady traction in export markets supported overall business performance during the year. Revenue from operations for financial year 26 was rupees 2136 crores, while EBITDA came in at rupees 166 crores. Profit after tax for the year was rupees 103 crores. The company reported its highest ever annual sales volumes of 3,95,900 metric tons during financial year 26, supported by higher throughput across facilities and improving contribution from value-added products. During Q4 financial year 26, business performance improved both on a year-on-year as well as sequential basis. Revenue from operations for the quarter was rupees 693 crores, reflecting growth of 47.5% year-on-year and 47.2% quarter-on-quarter. EBITDA for the quarter was rupees 58 crores, while profit after tax came in at rupees 38 crores. The company also achieved its highest ever quarterly sales volume of 1,23,262 metric tons during Q4 financial year 26. Improved utilization at the Mangaon facility, better product mix, and increasing contribution from DFT structural steel pipes supported overall volume growth during the quarter. Operational EBITDA per ton improved during Q4 financial year 26, driven by better realizations and increasing share of value-added products in the overall mix. During the year, the company continued to focus on expanding its value-added product portfolio and strengthening its presence across domestic and export markets. Products such as DFT structural steel pipes continued to gain acceptance across infrastructure and structural applications. Export business also recorded healthy traction during the year, supported by wider market reach and improving customer additions across geographies. The company continues to focus on improving operational efficiencies, increasing utilization across facilities, and enhancing the contribution from value-added products. Demand from infrastructure, industrial and construction-related segments continue to remain supportive, and the company remains focused on strengthening its market presence across these segments. With this, I would now request the moderator to open the floor for questions and answers. Thank you, everyone.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Dhruvesh Kanakia from Antique Stock Broking. Please proceed.
Good afternoon, sir. Congratulations on a good set of numbers. Would you mind sharing what was the share of value-added products during 4Q in the sales mix?
Hello?
Hello?
15 years.
Hello, can you hear me?
Yes, can you please repeat the question?
I wanted to ask what was the share of value-added products in your sales mix for 4Q?
It was around 27% total value products for Q4.
And what was the contribution to the sales volume from the Mangaon facility?
The major addition in the sales volume has happened with the Mangaon facility itself. We have been impaneling most of the places for our DFT products, and the major increase of sales, or in fact, the majority sales is happened from the Mangaon facility itself. The new addition from our usual run rate was around 90,000 tons to 1 lakh tons. The entire addition of 20 to 25,000 tons is from the Mangaon facility itself.
Okay, so you said that it's about 20,000 tons run rate per annum, per month. Is that correct?
No, in a quarter's time, our average run rate was 1 lakh tons a quarter. In this quarter, as we've delivered 1.25 lakh tons, the additional 25,000 tons has been delivered from the Mangaon facility itself.
Okay. So we can, what would be the run rate going forward? Is this expected to scale up further?
Yes, we are adding the sizable capacity in our Mangaon plant. We are adding cold rolling complex in which we'll be entering into valuable products such as color-coated pipes and GP pipes. And the total capacity outlay for that is 7 lakh tons. So we can see a increase in sales happening from the entire, whatever increase in sales will be happening through Mangaon itself. There is no other addition happening in any other facility. The total addition capex is planned at Maharashtra itself.
Okay. Would you mind giving any guidance for FY27 volumes?
Given the run rate that we are on at and how we are adding capacities, it's safe to say that we'll be able to deliver around 30% volume growth YOY.
I'm sorry, I could not catch that.
30% volume growth YOY.
Okay. All right. Thank you. I'll get back in the queue.
Thank you. Next question is from the line of Sneha from Nuvama. Please proceed.
Hi, team. Thanks a lot for the opportunity. Just a couple of questions from my end. How is the demand currently on ground? If you could take us through that. And is the channel actually in restocking or destocking mode? Could you actually speak about that?
Hi, Sneha. The market is on a good track at the moment. There has been a lot of correction after the duty was introduced in the month of November end. So the prices have gone up, and there has been since then a lot of stocking. Due to the recent elections and everything in the 2-3 states, there was a little bit of a slowdown in the first week, but as of today, we see that there is a good pickup from the market, and we are in a good mood to say that the market will remain good in the coming this quarter. So there shall be no problem in the pickup of material.
Understood. And secondly, what is the utilization of our Mangaon facility at this point of time?
We are about 35%, 40% range at our Mangaon facility. As I mentioned earlier as well in the Concall, that we are getting panel most of the places, and the bigger capacity in the Mangaon facility is the DFT pipes. And it's an ongoing process in which we are getting onboarded most of the places. So recently, you must have seen as well, we have gotten an ACRS certification, which is a certification to supply pipes to Australia. And we are one of the only companies, in fact, the only company in India and pipe segment to get the certifications. And recently, we have explored our options to USA as well and even Canada as well.
So given all these situations in which we are adding capacities and getting certifications in a timeline manner, so we're very confident that our DFT only will be scaled up in a much higher way, and that will result to a total utilization levels about 60% to 70% for this year itself at our Mangaon facility.
Wow. And majority of it will be led by the domestic or exports, or could you actually give us the aim for the Mangaon facility that exports and domestic would look like how much percentage?
So, Sneha, it's easier to say that our total export guidance or export target for the company is to reach export contribution of 15%. Right now, we have reached export sales percentage of 10% on a higher volume growth. So given that we will be delivering higher volumes as a company as a whole in the coming years, we wish to aim a 15% export orientation.
Understood. Understood. And when you give volume guidance of 30%, what would be your EBITDA per ton guidance for next year?
So for this whole year, we have done 3,900 rupees EBITDA per ton. As we are introducing value products in Maharashtra in our expansion, it's very hard to say right now what the exact EBITDA per ton would be, but given the circumstances and the market of steel remains the same in similar situation, we'll be able to deliver a 10 to 15% EBITDA per ton growth as well.
Understood. Understood, Pranav. And lastly, could you also give us, what's happening with JTL Defense? How is the performance moving? How are the approvals looking like on that particular business?
So JTL Defense company is into manufacturing of copper, brass, and phosphorus bronze alloys. We got the plant in December under the JTL umbrella, and earlier it was known as RC Industries, and now it is JTL Defense. Given in the first quarter the Q4 was the first quarter with the new management, and in that quarter itself, we did a small top line of 15 crores because the plant is in overhaul stage and a lot of minor capex is being done over there as well. But still, we were able to deliver a 20% EBITDA margin on that, and it was profitable. So going ahead, in the Q4 exit quarter, we were close to 100 metric tons of production in that at our JTL Defense. Going ahead, we are already at a 150 metric tons of run rate of per month, and by exit quarter of this year, we should be at a run rate of 500 metric tons a month. The total capacity over there is to deliver up to 700 to 800 metric tons a month, which we shall be achieving in by FY29.
Understood. Thanks a lot, team, and all the very best.
Thank you.
Thank you. Before we move to the next question, a reminder to the participants: to ask a question, you may press star and one. Next question is from the line of Prateek Srivastava from Nivesh Wisdom. Please go ahead.
Yeah, thank you, sir, for giving the opportunity. Sir, my question is along the lines again on our value-added mix. So we are seeing a very strong EBITDA per ton growth, right? Almost doubled the YOY. But if you're saying that we have a very strong increasing, the value-added product mix as well, shouldn't that also translate to revenue per ton mix, which is like flat YOY?
No, I'm sure you have seen the strong EBITDA per ton growth YOY. And actually, it's the average EBITDA per ton that the company has been doing in the past as well. It was just that Q4 last year was extraordinarily weak quarter because of the volatility in steel. So the increase might be seeming a lot. If you look at the numbers quarter on quarter, we are in a steady state situation, and the EBITDA per ton is around similar levels, 150 rupees higher than the last quarter. And the revenue per ton is very much dependent on the HRC cost. So the HRC cost has been rising, and that's why our revenue per ton has increased as well in that way. And the realization has been increased as well. Going ahead, as the product mix will change towards color coated, that's when you will see a higher revenue per ton as well, because those products are super value-added items. And right now we are selling DFT pipes, galvanized pipes, and black pipes, and they are
the same products that we have been doing since past as well. DFT doesn't have a very different revenue from black pipes. So the color-coated items has a different kind of revenue per ton. So the increase in revenue per ton will be seen in the future.
And when you say future, like from which quarter?
Sorry?
When you say color-coded, we are going to see in future more of that, in the product mix. From which quarter are we saying? When are we?
We are almost towards the closing stage of our capex at our Mangaon facility. By end of H1, we should be a full running facility of a full new capex.
Okay. And what are like the utilization guidelines on this facility, sir?
So as I mentioned that this year we've done 3.95 lakh tons of sales, and it's safe to say that we'll be able to deliver 30% growth YOY for the sales volume, given accounted for the new capacity as well. Because the new capacity comes in, it takes some time to set up as well, to get it running as well. So it's safe to say 30% is an easy target.
Okay. Thank you.
Thank you. Next question is from the line of Darshil Javeri from Crown Capital. Please go ahead.
Hello. Good afternoon, sir. Thank you so much for taking my question. Firstly, congratulations on the great set of results, sir. Hopefully, I'm audible.
Yes,
Hello.
please proceed.
Yeah. So, sir, just wanted to, ask in our business, what's the seasonality like between H1 and H2, sir?
Yeah. Hi. Seasonality is there because of majorly monsoons hitting the entirety of India. And H1 is basically the H1 and H1 is when the new financial year gears up due to newer projects being announced and everything. So that takes a little bit of time. So H1 is generally a little slower, and H2 is a little faster than H1. But due to whatever is going around with the peaking of things with the international and the local scenario, these seasonalities have not played their essential core role in the last few years. So, and this year we feel that there is a good demand in the first quarter, then the second quarter would specifically be guided by the monsoons thereof. Yeah, and then, yeah, so, but however, the export market keeps on going on. So, all in all, it should be a good quarter.
Okay, fair enough, sir. So just why I wanted to ask this question was, I think in Q4 we've done around 1.25 lakhs per ton, right? And so if I annualize that itself will give us, more than 5 lakh tons of sales, and we are guiding for 30%. But even if Q4 run rate we maintain, we're going to be more than 25%. So with Mangaon also increasing its stake, we should be having a higher sales. Is that a fair way to look at it, sir?
Definitely, our internal target of the company is to deliver the best possible numbers and get the capacity that we already mentioned as soon as possible. But there are multiple factors, and it's a different kind of capacity that we're adding. So 1-2 weeks delay, a month's delay is very unforeseen. And given how the situation is all around the world right now, how things are happening, the geopolitical situations are rolling out. So it's just very difficult to say an exact number or an exact growth target as well. 30% is something that we'll definitely achieve. Whatever over and beyond we, after the capacity comes on, as per the timeline, we'll definitely come and revise the target as well for this year. But
Okay.
30% is something that we can easily do with the current capacity itself. A new capacity, whatever comes on the timeline basis, will come and upgrade the future outlook as well.
Okay. Okay. Fair enough. So that helps a lot, sir. And so, with JTL difference, I'm sorry, I couldn't catch the figures correctly. So right now we are around at, I think, 100 tons a month, right? And we want to scale it up at the exit run rate to 500, right? So in terms of revenue, where we are at, like, sir, could you just help me out with that, sir?
So, 100 tons equates to 10 crores of revenue. And given that the model in this business is it's a mix of job work and outright sales. So 100 tons is something that we produce right now in the company that dispatches 100 in a month's time. So the tonnage and the revenue is not the correct way to, like, will not be reflecting the same way. But as per the guidance, we'll scale up the mixture of job work and outright sales to 500 tons by exit quarter.
Okay, so just like to know overall, like I don't want the exact figure, so what is the rough contribution we can expect from defense in current year, sir? Like even a rough figure would be fine, sir.
So for this full year, we should be targeting close to 150 to 200 crores of top line in the company. And going ahead, as I mentioned, that 500 metric tons a month, so close to 6,000 metric tons. And if you do the peak potential the company had previously done in the past before getting into NCLT is 1,500 crores. So that's the opportunity that we have in the company as well. So by FY29, we'll also target that we get as close as possible to the revenue of the company. But as per the production numbers, it's easier for me to say that 500 metric tons is something that we are focusing on the short term. And going ahead, as how we unfold the capacity, we'll see.
Oh, okay. And this is 20% margin business, right, sir?
Given that how the copper increased in the recent past, we were able to give a 20% EBITDA margin in this quarter. Going ahead, on a bigger capacity, on a bigger utilization level, we'll be able to give a 20% EBITDA margin as well. But this 20% margin of this quarter was not a fair number from my side. So it's a lot of inventory gains in this quarter which happened as well. Because the capacity just started in this quarter, and in future, we definitely will be achieving these kind of numbers. But given in this quarter or next quarter, if the copper prices are stable, we'll be able to deliver close to 10 to 15% EBITDA margins.
Oh, okay. Fair enough, sir. And just the last question.
Sorry to interrupt, Mr. Javeri. Maybe
yeah, I'll get back in the queue.
Thank you, sir. Next question is from the line of Dipesh Waghela from Credent Asset Management. Please go ahead.
Hi. Thank you for the opportunity. Am I audible?
Yes, please proceed.
Yes.
So I just wanted to understand that the volume in Q4 were really strong, but the margins are still under pressure. So what is the normalized EBITDA per ton that we can expect going forward?
We were able to deliver higher EBITDA per ton in Q4, and given going ahead as well. So as you mentioned that for the full year, we have given an EBITDA per ton of 3,900. Going ahead, we should be the targeting 5,000 rupees EBITDA per ton, but it's safe to say that 10 to 15% EBITDA per ton growth will definitely come this financial year.
Okay.
So from 3,900 levels, we should be touching somewhere close to 4,500 to 4,800 rupees for this financial year. And as and when the new capacity unfolds for the CRM, for the color coated and gal volume, so that time we'll be in a better position to give you how the EBITDA per ton is rolling out for the future outlook.
Okay, understood. And since the volume is really good, but the profit is still lagging, so like, is there any steel price pressure, import steel price pressure in Q1 as well, Q1 FY27?
No, there is no pressure from that segment, but it's just that as we are rolling out new products as well in the market, DFT is a new product, so somewhere we have to some places we have to give discounts as well to push the product. So the company will be delivering all times of revenues and all-time high EBITDAs as a whole for the full year. And as I mentioned, for the full year itself, we'll give a EBITDA per ton growth. But given that how we are placing ourselves, expanding a capacity every quarter, it's very tough to maintain a guidance to say that this will be a profit this will be a EBITDA per ton. For the full year, we are definitely sure about giving a higher EBITDA per ton.
Okay, understood. And in terms of Q4 volume growth, I just want to understand that how much growth came from the capacity ramp up and then from market share gain and from channel inventory filling. So if you can just give a breakup of that.
There was no inventory gain as such, but the utilization levels in Mangaon facility picked up. And as I mentioned, the DFT products were being pushed aggressively in the market. So these were the reasons that you could see the massive sales increase in volumes throughout. And this was even in the export market as well, because our exports had increased because of DFT products. So all in all, it was a DFT play which is happening.
Understood. And I can see that the export contribution in Q4 has crossed 10%. So like I just wanted to understand like what is the margin difference in export and domestic after considering the freight cost? Like our export margins superior than the domestic margins?
Yeah. So we can't really quantify the difference as a thumb rule. Depends upon how the pricing in the Indian market and the market abroad is. So as of today, the Indian market for HR coils and pipe is more expensive than the export market. So we have to work on the basis of imports. So all in all, and majority of our export market is value-added product. We are sending about majority of it is galvanized, and now in addition to that is GFT. So all of it is a value-added product. So therein the general levels of EBITDA is about 6,000 to 8,000 rupees, depending upon galvanized thickness, ranges, size range, etc. So that is what it is. It is there is no gain of higher margin in the export market, but yes, there is gain of higher volumes, wherein we get a singular size of higher volume that we are not able to get in the local market. So that entails for economies of scale. Yes.
Okay. And just one last thing. So like I just want if you can provide guidance of FY27 for the following like volume growth, EBITDA per ton, utilization, and ROC if you can provide.
So as we mentioned that there would be a 30% increase in volumes year on year, and in EBITDA per ton we can expect a 10 to 15% growth in EBITDA per ton. So utilization levels going ahead as DFT is being empaneled and a CRM. So our very big capacity is coming on board by end of H1. So it will be very tough for us to give the exact utilization levels right now. Coming ahead in next quarter, we'll definitely come and give the utilization levels guidance as we'll be much closer to our CapEx.
Every month there is something new starting. So with that, the utilization of that particular product is a little lower than the rest of it. So to give you a number on that utilization is not what we can do at the moment. So that is where we're coming from. So in the next year, from 1 million ton of capacity, we will be pushing ourselves to a 2 million tons of capacity with the newer expansion. So right now, me able to give you a utilization level is not what I can do at the moment.
How the ROC that we expect?
The ROC and ROC, we should be driving close to 25-30% ROC for the next years, given that a lot of our assets are not sweating and a lot of CapEx is happening. A lot of assets are in CWIP as well. So as and when the assets will be capitalized and we started to do production on those capacities, we should be seeing ROC coming back to traditional level of 25-20% levels, which the company has been delivering in past. It was only because of the heavy CapEx cycle that we've gone in the past 1.5 to 2 years that the ROCs have fell down. So as soon as the CapEx is complete, we should be seeing the bounce back in ROCs and ROCs.
Okay, understood. So that's it from my side. Thank you so much.
Thank you.
Thank you. Next question is from the line of Lokesh Kashikar from Smith Institutional Equities. Please go ahead.
Yeah. Hi, sir. Congratulations on the good set of numbers. Most of the questions have been answered. Just wanted to check on the CapEx front. So we were earlier targeting 22.5 lakh tons of exit capacity by FY27. So just rechecking, is that guidance remains intact?
Hi, Lukesh. Your voice is muffling in between, but from what I've got, that to reach a capacity of 2 million tons by FY27, yes, that's the intact target. That is still intact.
And what would the CapEx that would be incurring for this, to reach this capacity? I believe that would be by FY27 end only. So what is the CapEx numbers you are looking for?
So majority CapEx has been done for the 2 million tons capacity. There is only some bit of CapEx left for H1, which is close to 60-70 crores. So we'll be doing this kind of CapEx in H1, and then going ahead, there will be some maintenance CapEx of 30 crores to 40 crores for H2. So the total plan for CapEx is close to 100 crores and 120 crores for this full financial year.
Noted. And so just wanted to check, we have reported around 4,700 of EBITDA per ton in quarter 4. So what would be the broadly inventory carrying gains during the quarter?
Sorry, what would be the?
What is the inventory carrying gains in, let's say 100, 200 rupees? What would that number would be for quarter 4?
There is no kind of inventory gain that is there in the quarter. Whatever products have been sold, they get realized. Otherwise, there is no inventory that changes as such. So there is no absolute inventory gain in this quarter.
Okay. So that's it from my side. Thank you.
Thank you. Next question is from the line of Shaiditya, an individual investor. Please go ahead. The line for the correct questioner got disconnected. We'll move to the next question from the line of Aryan Bhatia from Inved Research. Please go ahead.
Thanks for the opportunity. I'm on this.
Your voice is very low.
Okay. Hello. I'm on this.
It's still the same. Please go ahead with your question.
Okay. My question is regarding the volume. So we have guided around 30% volume growth this year. But in the previous quarter, if I looked at, we were guiding for at 6 lakhs in FY27 and 9 lakhs in FY28. But if I take the 30% volume growth, it comes to around 5 lakh 20. So just wanted to know what is the reason behind it? Why have we downgraded the guidance from 6 lakhs to, if we take 30%, it comes to around 5 lakh 20. That is my question.
Thanks for your question. So given how the capacity that we were supposed to start earlier, that there has been delay in the CapEx. The CapEx that we're doing for the color-coated complex is a very huge CapEx and one of a kind. So there was some delay in the CapEx because of rains as well and a lot of multiple factors. So as the CapEx is delayed, the outlook is delayed as well. But as I mentioned again, that as soon as the capacity starts, given on the current capacity itself, I'm given a 30% growth. So as soon as the capacity starts, we'll come and upgrade the guidance as well. So by next quarter's end, so we'll have a fair picture on how the capacity has started and how it's playing out in the market. And we might be in a situation that we deliver what we mentioned before as well.
Okay, got it. And so my second question is regarding on JTL defense. So you are guiding for 10 to 12% EBITDA margin, but if we look at other players, especially copper converters or copper alloy players, they are basically able to get around 6 to 8% margin. So what is the rationale? Like, why are we able to do such higher margins in copper alloy products?
I'm not sure about the companies that you mentioned are in the same kind of products that we make. We are in a fully backward integration process at JTL Defense, in which we are from the first step of procuring copper and zinc to the last step of making the bullet shell. We are into various processes to make ultra-thin foils in the market as well. And there are limited players in the market. And in fact, I don't know any listed player who is there in the market as well in the same business. So I think it's a different business model that you're mentioning about. But in our kind of business, as I mentioned, 20% is not a fair EBITDA per margin for now. But going ahead, it will be. So, but the current situation as well, 10 to 15% is we can easily target for the coming quarters for this financial year.
Got it. Got it. And my last question is on our operating cash flow. So when do we expect, to turn positive operating cash flow? Because for the last 2 to 3 years, we have been posting negative cash flow. And if I look at the debt as well, this year has increased. So just wanted to know when can we expect positive operating cash flow coming in?
So as a lot of the full cash flow is kind of linked to the CapEx cycle that we have incurred. It's a heavy CapEx cycle that we've done. So as we are inching towards the finishing stages of a CapEx, by probably next financial year, we should be having a positive cash flow.
Got it. Got it. Thank you. And
Thank you. Ladies and gentlemen, to ask a question, you may press star and one. Participant, if you wish to ask a question, you may press star and one on your touchtone telephone. Ladies and gentlemen, to ask a question, you may press star and one. As there are no further questions from the participants, I now hand the conference over to the management for the closing comments.
Thank you everyone for joining our earnings call. I hope we were able to give you the answers to your queries. If you have any other further questions or would like to know more about the company, please reach out to our investor relations team. Thank you everybody for joining the call. Thank you.
Thank you so much, sir. On behalf of Antique Stock Broking, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.